Tesla, my Tesla. Congratulations, all Tesla shareholders. What a day. This stock is up over 20 percentage points here today. We're going to talk about what the heck to do with this stock now. Take profits and run. Keep buying, keep holding. We're going to speak about all that in this video here today, folks. Appreciate y'all joining me. Got a bunch of videos to react to. Obviously, Tesla is the talk of Wall Street here today, right? So I want to react to this one from an hour ago on CNBC. Tesla's price war is over, says this gentleman. Looking forward to reacting to that. Then we get this one from Wall Street Journal's Tim Higgins on Tesla's blowout quarter. Hear his opinions, share my opinions, perspectives on that one. Tesla's margins were exceptional in Q3. Going to react to that one. Tesla bull and bear case. Looking really forward to getting in this one. I love a bull and bear case debate. That should be fun. This one from 20 hours ago. Dan Ives last night speaking about the numbers, and then Gene Munster 19 hours ago, he spoke about Tesla's numbers as well. So looking forward to reacting to all of those. Appreciate y'all joining me as always. All I need from you guys is smash that like button, hit that like button, do whatever you got to do to that like button, but abuse it, okay? Appreciate y'all being here. Thank you for being subscribed to the channel. And additionally, what's the last time I filmed an outdoor video? We actually got a rare outdoor video here today, folks. Yes, we do. The weather's beautiful here in Vegas. It took forever for it to actually get nice, but it's gotten nice here recently. If you think you're rich today, just understand Elon Musk's net worth is up $23.9 billion today, which is insane because his net worth going up that much today, that might be more than like the 50th richest person in the world is worth. Like, and he went up that in one day. Like, isn't that a crazy number? $23.9 billion. What a flex. Yeah, if you guys are looking to join my private stock group, apply to join that. There'll be a pinned comment down there, and you can go ahead and do that. Let's get into this.
MKM Senior Research Analyst Craig Irwin. Craig, great to have you.
Thank you.
I mean, up almost 18 now.
Man.
But I guess is it really just unwinding the post-Robotaxi day sell-off?
You know, it's a little bit of Robotaxi day, but it is the fact that there was optically a chunky beat on gross margins, and people are saying price war is over. So I agree. I think the price war probably is.
Is it just me, or are all these guys like 6 months behind what my commentary is? I was telling you guys the price war is over like a while ago, right? And I told you, like, I was calling all this out a year ago. I said Tesla's margins and their whole business is going to start to improve in the back half of 2024, right? And I was saying that a year ago, and this is exactly what we've seen play out now at this point in time. And it's like these folks are they're really behind. I was calling inflation dead 6 months ago. Now finally people have come around to inflation's dead.
Given that, you know, most of the mainline competition's backing off their commitment to electric vehicles. You know, Tesla.
Remember, skate to where the puck is going, not to where the skate was. Skate to where the puck is going.
Completely committed forever. So price war is off. But we have to ask why. Why did the company beat? How did they actually get this beat together? And, you know, understand that to understand sort of where the future trajectory is.
You're not alone. There's a couple other underperforms today. One points out investors have just been used to misses, and that this is a welcome relief from that. The other, though, is these sales of 100% margin regulatory credits. And did that dress up the quarter?
So if you take out both the FSD revenue, which is deferred revenue that, you know, they had a chunky drop in the quarter. If you take that out and you take out the regulatory credits, margins went from 13.7 to 15.6, 190 basis points. So how did they do it? So I watch batteries very closely. I watch the battery industry. I have worked in the battery industry. Batteries look like they were off about 10% sequentially in the quarter. So Spodumune key material was off, you know, far more than that, 15%. You know.
Oh my gosh. Do you see that price target right there? Do you see that thing? $85. $85 price target. Oh my gosh.
If you look at the average battery pack at Tesla, roughly $8,000 a pop, you know, that $800 delta is enough to explain 190 basis points on a $41,000 car. So if it is all from the battery side, this won't repeat. Now, that's what the CFO said in the call, is that, you know, they don't see, you know, economic conditions supporting the same strength. You know, then this is much more one-time in nature. This is not fundamental. Fundamental is obviously price war is over. I would agree with that, and that's generally positive. But it's still overvalued. I think the whole robot dreams and AV dreams are, you know, not going to pan out quite the way that they've been telling the story.
But if you admit the price war is over, then can't those automotive gross margins continue to climb back up to, I don't know, 20s? Isn't that the bull case?
So the reality is that the mix of vehicles that they're going to have to sell going forward has to get smaller.
Why is it that every time I try to record a video outside, freaking helicopters are going over? Like, do I live in like a helicopter lane? Like, they're like, oh, Jeremy's recording an outdoor video. Let's just fly helicopters around. That'd be fun.
Right,
Come
we need
on,
to
man.
see the mini car. I've been talking about the mini car for 5 years
Fly
now.
your chopper
right?
somewhere
the
else.
biggest strategic bungles at Tesla in the last 5 years were not doing the mini car because they thought the margins were too low and not going into India. Right, the mini car will be a lower margin product, but that's what makes EVs compelling for everybody. Right, you know, the ideal second vehicle, lower cost to operate, lower cost to maintain. You know, that is the mega mass market car, and those will be fundamentally lower margin vehicles.
Do you think volume can be 20 to 30? Does anyone think that?
The market, if you take Tesla out, looks like it probably is going to grow closer to 30 than 20 this year, right? Which is actually pretty strong. So, I'm committed to the EV market, even though I'm bearish on Tesla.
Right.
I think the market's actually doing pretty well. Is it possible that Tesla has some refreshes, some new vehicles that lift that for them next year? Absolutely. I think Tesla, is a great company. They know marketing, and the probability of them executing to 20% plus is pretty high.
But doesn't it help to have the stabilization in the core business? I guess that's what today feels like it's about, in order to do the big stuff on autonomy and AI, robo-taxis.
Yeah, the margin beat is fundamental. But how and why, right, is what I'm underlining for people. The battery issues, if these pass and sort of it's water that flows under the bridge, and then we go back to tepid margins, that's, not nearly as bullish. And, that's one of the reasons.
So the mistake this gentleman's making is Tesla's always improving how they bring down the cost of vehicles. They've been doing that for the last 10 plus years now at this point in time. This is a very special company with a very special set of engineers with a CEO who is relentless in bringing down the cost of these vehicles. So as soon as they get done finding any sort of cost savings, they get right back to the drawing board and they're worried about more cost savings and more cost savings. And they got some of the most intelligent people you could imagine on that workforce, right, that are just consistently thinking about how do we bring down costs, and this is how they're able to do it over time. They're able to save a little bit of money here and a little bit of money there and a little bit of money there, right? And throughout all these little things that they figure out, okay, we could do this even more intelligent, doing this, right? Through all of those different little things, that ends up adding up to huge cost savings over time, and they've been able to bring down the price of electric vehicles in a way faster way than we've ever seen any company in history, at least in North America, right? And really the only ones that are kind of somewhat similar to them in terms of how they've been able to bring down prices, some of the Chinese EV manufacturers. They're just on a whole different level when it comes to this game, right? They don't stay content for even a second at that company. And so they're just you got to understand, like, over the next 10 years, they're going to find even a lot more cost savings in how they produce these vehicles and do them much more efficiently, much more profitably than anyone thought possible, right? And so that's just the name of the game. Now, he says here, potential for delays and other complications in production ramp of new vehicles. Sure, that's always a thing, but that's a short-term thing. Like, okay, let's say a ramp of a vehicle takes a little longer than expected. Okay, sucks. Like, we're 6 months behind, 12 months behind, whatever, right? Big deal. We're still going to get out there, right? Risk of cost escalation and delay in meeting volume targets. Okay, like, all right, short-term thing, once again. Growth plans hinge on the completion of the Gigafactory on schedule. Another, like, really short-term thing. Like, let's say Gigafactory's 3 months behind, 6 months behind, 9 months behind. Who cares? Like, all these things, and this is why these people in regards to Tesla, they'll never understand the Tesla shareholder base, right? They'll never understand this stock. They'll never understand why the stock trades here. No one cares about all this short-term stuff that they all get tied up into. Oh, what if they're 3 months behind on the schedule? What if they're 6 months behind? No one cares. All that they care is that the vehicles ramp, they sell really freaking well, the margins go up over time, right? And the robo-taxi opportunities there, and they can capture that market, which is an insanely huge market, right? What happens one quarter versus the other, it doesn't make a difference to the majority of investors in the stock. Does it make a difference to a lot of these Wall Streeters? Sure. And that's why you see Tesla on a day like today up 20+%, right? A lot of the Wall Streeters getting involved. But a lot of us retail investors, we're not buying today. If we wanted to buy, we already were buying in the past, right? So, but for a lot of these Wall Streeters, they're like, oh, I got to get in now, right? The stock's running to 300. Like, oh, short term's looking good here. And it's just like they never understand the shareholder base, and that's why the stock, it's very important to understand why the stock trades at very rich multiples, because you look at Tesla and you're like, gosh, man, stock is so expensive. Ford P of 85. Keep a few things in mind that are very important here. One, that Ford P, it probably isn't going to be accurate in the end, right? Because remember, forward Ps are done based upon analyst estimates over time. And so analysts are probably too bearish over the next 12 months in regards to Tesla. So don't be surprised at all if Tesla comes in and beats EPS projections. And so that forward P might be actually a 70 or a 60 or a 50 or something like that, right? And additionally, the long shareholders are in this because they believe it's going to be a several $1 trillion market cap over time, right? A several $1 trillion market cap, if not a $10 trillion type company. And so, when it's under $1 trillion, a lot of people doesn't matter to them. They have this company pegged at a $5 trillion market cap 5-10 years out. And so to those folks, they're like, I don't care. So, that's just important to understand about the psychology around this stock.
We have clients that are shorting the stock today is they think that, this is right. That the reality is, we're going to...
Clients shorting the stock today? Are your clients crazy? Are your clients crazy? Listen, you don't short Tesla stock when the revenues are trending back up, the margins are trending up, the profitability is trending up, and the future is back in a hype cycle, right? We have all of those dynamics all adding up now, right? We've now, everybody's excited about the future, robo-taxi and how that's going to launch the new next generation vehicle. It's going to be under 30K, Optimus robot. Everybody's hyped about the future again in regards to Tesla, right? You got the revenues trending up, the margins trending up, and profitability trending up. That's not a time to bet against Tesla stock. When those things are in reverse, it's a great time to bet against it. I made a lot of money on put options in regards to Tesla stock, right? It was a phenomenal opportunity. That was in the past. That's not now. You had a 2-year span, if not 3-year span, where you could make plenty of money playing around with Tesla, betting against that stock, right? Let's go ahead. Let's pull up here Tesla. Let's pull up a 5-year chart, right? From basically the end of 2021 all the way through until, the springtime, you had a great spring of 2024, right? You had a great time to bet against Tesla stock. You had a great time to buy puts, short the stock, do whatever you wanted to do in regards to stock. You had several years to have some fun here, right? But those days are over now. Those days are over, and you gotta understand that. And so these folks his clients that are shorting the stock or buying puts are crazy. Like this stock could run to 300 before you know it. Like, come on, man.
Have sort of normalization after this, and this is a burst of enthusiasm after several quarters of weak performance.
Imagine shorting the stock this morning. You're already getting obliterated. Like, remember where the stock opened this morning, right? So you're like, oh, Tesla's got to give up these gains. It's not going to hold, right? Stock opens this morning at 243. You're already at 258. 258. So you're already getting absolutely wrecked. And this is just one day. What happens if Tesla momentum comes in the stock for the next, 2 weeks, 2 months, 3 months?
I was going to ask if it's a tough day to be a bear with the stock.
No, you know me. I'm always sort of roll with the punches. I don't ever really care too much about being in the mainstream. My goal is to add value for my clients.
Gosh. My Nana used to say, if you don't have anything nice to say, don't say anything at all. I'm gonna stick with that. Thank you, Nana.
Soaring earnings of 72 cents a share, a pretty good beat on 58-cent estimate. Revenue just shy of expectations. Investors focusing, though, on this prediction from Elon Musk on the call afterwards.
To take a bit of risk here, I do want to give some rough estimate, which is, I think, it's 20 to 30% vehicle growth next year. Notwithstanding negative external events, like if there's some force majeure events, like some big war breaks out or interest rates go sky high or something like that.
Joining us now, Tim Higgins, Wall Street Journal business columnist and a CNBC contributor. He does say, Tim, that these are just my best guesses. I don't even know if anything goes into his best guesses. But the first, so far this year, I think deliveries are down 6% or something. So to go to 25 to 30, that takes a leap of faith. But I'd never discount Elon Musk. But it
doesn't take a leap of faith. Here's a few things to factor in, right? One, easy comps. These comps are going to be caked to comp against in 2025, right? It's just mathematics. Like coming off of 2023 to 2024, much tougher comps. Going 24 to 25, easy comps, okay? It's just math. Second, new, more affordable vehicle in the market in 25. That's going to help immensely. Cybertruck going to be fully ramped for all of 2025. That's going to help big time, and don't be surprised if they release some, let's call it less expensive Cybertrucks that get demand going really, really insane in terms of production there. So we're going to see massive growth in regards to Cybertruck in 2025 in terms of volumes versus 2024, plus new vehicle, plus easy comps, right? And the business is also trending up. So you factor all of those things in, and potentially a lower rate environment, and potentially a consumer is in a better spot in 25 versus 24. You have a lot of factors. So when Elon Musk said that number yesterday, I didn't think that was like a crazy number. I thought a lot of people were like, whoa, that's a big number. To me, I was like, yeah, 25, 30%, or 20 to 30%, that could be very possible, right? No, that's impossible.
He just says, look, this is just a guess. Is that something that people should buy the stock on?
Just rolling the dice, right? No, it's back to kind of that optimism that investors like about him. It's kind of been missing in the last few years, that kind of target of potential growth. It's not the 50% year over year growth that investors were accustomed to in the past few years, but it's back to, hey, things are going to be exciting, and this is a growth story. This is a growth stock, and you have to have growth to kind of fuel that enthusiasm. So I think investors are excited about that. They're also excited about not just the profit that they saw, but the kind of the profitability. Those gross margin figures are exceeding expectations, and back to kind of some of the glory days that they remember from a few years ago.
We got a long way to go.
That had kind of gone away as he was chasing growth that wasn't the same kind of growth, and it wasn't the same kind of profitability. So those two levers, people are pretty excited about that, I think.
It's all so multifaceted and interesting that, yeah, profits are the margins go up because selling the regulatory credits to other companies is 100% profit margin, and they got that stuff. Pure profit. Yep. And the other companies are like,
you want us to say sorry for it?
Can we have? They need those regulatory credits. It's interesting the way it works, but profit is profit, and he's going to use that $10 billion. Or not 10 billion. He's going to use 10 billion for AI and robotics and everything else, autonomous driving. Don't you think investors also liked that he's not going to do a $25,000 cheap Tesla? He says it makes no sense, and they're going to work on the cab or the robo-cab instead.
They're going to go.
Well, you're pointing out an interesting dynamic here that Tesla, a unique strength that it has. The EV market is struggling right now outside of Tesla. And automakers are pulling back their plans, and because they're pulling back plans to sell EVs, they've got to buy these regulatory credits around the world. But Tesla benefits from that. Mm-hmm. They're out there as the leader in EVs, and then they're benefiting from others struggling there, and then they're able to take that money and invest it in AI and invest it in autonomous cars. Now, the idea that he's giving up on the $25,000 car that you will drive as a human, I think really rattled people at the beginning of the...
As my brother would say, don't hate the player, hate the game, right?
It's just confirming what the market had already kind of had digested on reports earlier this year. So I think people are beyond that, and now seeing the actual car and seeing some timelines for putting autonomous vehicles on the roadway in the next few years, there's that thing to be excited for again.
Subsidies are one thing, but I mean, the regulatory credits, this is basically thank you, Uncle Sam. I mean, that's what, or wherever these are being sold. That's not like an operating. It is and it isn't, right? And you can't say it's not non-recurring either, because they probably have plenty of these in the future to sell too. So I don't know how to look at that. It doesn't. It looks almost like government assistance.
It's one of those things that over the years has just kind of been hanging over the company. It's been there. It's gotten bigger. and it looks like it's going to continue to be an important part of the company, as we just talked about the issues the other competitors are having. But you also have this interesting dynamic where Elon Musk is out there and with his political hat on saying he doesn't want government help and that, that he doesn't want this stuff, and siding with Donald Trump saying the government shouldn't be helping this stuff.
Yeah, and it's, no one's expecting it to turn it down, I guess. So what about the timeline for the no steering wheel, no pedals? That's really happening near term?
Well, it's super ambitious. The idea that maybe in California and Texas he could be having Model Ys out there in autonomous mode driving, that's conceivable. We see Waymo out there. But the idea of putting a car on the road without steering wheels and without pedals, that's a big lift. That requires some special permissions and a lot of regulatory issues ahead. Just the idea of putting a robot taxi in California is a lot of paperwork for Elon Musk and Tesla that doesn't appear that they've actually begun. They're not running vehicles in the state without people behind the wheel currently. And so the idea that they're going to have a business out there doing that in the near term is, that's very ambitious.
Average selling prices for the models were.
See, the thing that's important to understand, when we're talking about an under $30,000 vehicle, is they could easily, and I mean easily, if you look at that robo-taxi car they showed off, right? If they made a few slight changes to that car, they could produce that and probably make incredible margins. Not probably, they would make incredible margins on that. Change the doors to just normal doors, not like the cool ones that open up, right? Put some pedals in the thing. Put a steering wheel in the thing, right? It's a 2-seater car, and sell that for under $30,000, and I'm telling you, they're going to move crazy volumes of that, because most people don't ever even use the back seats of their car, right? Most people are just, drive around anytime on the highway. Count how many people are in a car. Usually it's one person, maybe 2 people. And it's very rare you see 4 or 5 people in a car. Very rare. Like the far majority of people is 1 person in the car, maybe 2, right? Otherwise, that HOV lane would be packed all the time. So that car is going to sell incredible as long as they have an under $30,000 price point. And I'm telling you, they're going to make crazy margins on that, especially if they just have traditional regular doors that open up, right? I looked at how, oh my gosh, like if they just put a battery pack in that, which it's such a small car, if you just put a battery pack in that, which wouldn't even need to be a big battery pack to get maybe 200 miles of range, and so it's more of like a city daily commute car. Oh my gosh, they're going to sell ridiculous sums of those. It's going to be insane. It's like a whole new level. You're going to see those everywhere, right? And then you can make it even cooler without the pedals and without the steering wheel and all that stuff when it comes time and you already got, your FSD done. Maybe that's like 2027 by that point in time. But in the meantime, sell those like crazy with regular doors, steering wheel and pedals, booming.
And that, again, the regulatory credits offset some of that. Around the world, how was China?
Because let's say they sell them at $29,000 price point. Then you tack on the credits you get from the government. Now you're talking about a vehicle that's like $22,000. Are you kidding me? You know how well they would sell a brand new Tesla? $22,000 EV? You know how many people would get that have a daily commute? Oh my gosh. The volume would be like something we'd never seen from Tesla. It'd be a whole new level of volume.
China's helping, definitely. That's a big part of the business now. It's interesting. You hit this interesting point where Tesla has been having to decrease its prices to the consumer to kind of improve sales, to help that sales growth. The final quarter of the year, the guidance kind of implies that they're going to have which they should be having a blockbuster sales year. A quarter, if you will. That's probably going to require some price discounts, according to some experts. And so you've got this interesting dynamic where you're seeing prices are down, but yet their gross margins are up. So it kind of, once again, indicates that they've been able to take price and the cost out of some of those vehicles, and also helped by the regulatory credits.
I do like the optimism. He wants investors to view Tesla not as a car company, but as a robotics and an AI company with an eventual market cap of $30 trillion, in his view. I just like saying $30 trillion because we couldn't believe Yeah, we couldn't believe when a company hit $1 trillion and then $2 trillion and then $3 trillion, 30 trillion.
You think $1 trillion is cool. 30 trillion is really cool.
Right. Why is that the ultimate? Does it end? Does the market cap stop there? The company just doesn't keep going?
What's the time?
I think for now we need to stop at 30.
What's the time frame on that?
Yeah, exactly.
I was thinking, I hope I'm there to watch it happen. That may take the singularity for me to, Tim, we might need we need to be part silicon. And
yeah, be careful about even betting against that, right? Which does sound insane, like a 30 trillion, even a 10 trillion, right? But remember, when I got in the market, 08, 09, no one was even thinking on conceiving the possibility of $1 trillion market cap. Never mind multi-trillion dollars. Now we have several companies that are trillion plus and multi-trillion plus, right? What do we have? I think we have 3 companies that right now are $3 trillion plus. 3 companies, right? 3 trillion plus. Like, that's crazy. Like, 3 companies basically combined for a market cap around $10 trillion now. So, these numbers, could it be possible? It definitely could be possible. I wouldn't necessarily bank on it, but would I be surprised? No. I wouldn't be surprised. I mean, remember, look at Bitcoin's market cap today, right? And people say, oh, Bitcoin's not even backed by anything. Like, it's nothing. It doesn't have cash flow, doesn't have anything, right? And look at that market cap. So just be careful with the assumption that certain things can go to certain prices over time because, yeah, these companies are pretty amazing. By the way, I'm going to move this party inside the house because that sun is hitting me. Already had to move the party inside. That sun starts hitting here in Vegas. Woo! That Vegas sun's no joke. I'm telling you, I spent like a week in New York over the summer, and I felt like the sun was never even there. It was like a nice, gentle sun. But in Vegas, woo, the sun's nasty. Alrighty, guys, let's get in this next one.
You were at $254. You're now at $278. What was the catalyst? What did you see and hear that made you want to move your price target higher?
It was a few things. First, the margins were exceptional. And if you recall, over the last several quarters, Tesla's auto gross margins have come down because they needed to cut price based on weakening global auto sales because rates went up. But now they had an incredible quarter from a margin perspective, much better than anyone thought, because the costs of production came down to levels they've never before seen. That was the first thing. The next couple things were, despite skepticism, they reaffirmed that they would be launching some lower cost models in the first half of next year. And as you played, Elon Musk said they would grow sales probably 20 to 30% next year. What that means, what's very, very important for Tesla stock, is that the revenue and earnings growth are going to reaccelerate. And if you follow the growth rates of revenue, that stock very closely follows them. So if we see that reacceleration, which we saw since the first quarter, we're going to see Tesla stock continue to outperform.
I want to go to margin. This is a company that trades.
Yeah, and another thing is, if you're thinking about the margins and the profitability, this is very important. Everybody consider this, okay? Remember we talked about Cybertruck's going to, Cybertruck for all of 2025 is going to be a ramped vehicle. They're going to be able to put up crazy numbers in 2025. Literally as big of a number as they want to put up. If they want to produce 60,000 Cybertrucks next year, or 80,000, or 100,000, or 200,000, like whatever number they want, they can sell those, right? But the big thing to remember about Cybertruck is that was hurting margins in 2024, right? That's just starting to get to positive margins. In 2025, it's going to be a full year of positive margins and likely very positive margins for Tesla, which puts a company in an absolutely phenomenal position when it comes to their margin profile because they're going to sell a ridiculous amount of Cybertrucks next year. And the margins are going to be very good, which is going to help that bottom line, that profitability immensely as well, the earnings per share, right? So instead of Cybertruck being a drag on the business, it's going to start being a huge tailwind for the business. So from a headwind to a tailwind. So that is something people have to consider.
Even though it's a tech company, it kind of trades on margin like an auto company may. Minus those credits, it beat margin by quite a bit. The estimate was 16.3. The actual was over 17%. What does that tell you about this company going forward? Does that also settle some of these thoughts that Elon Musk is distracted? We've seen him on the campaign trail. We know he has other enterprises. Does this settle this in the mind of investors, at least in the near term?
Cool building.
At least in the near term. What the company has said, what Elon Musk has said consistently, is that their competitive advantage will be manufacturing, the machines that build the machine. And they continue to show time and time again that they're able to lower the costs of production and be the only or one of the only companies in the world that can make money in electric vehicles. So this is a consistent story behind Tesla. Their cars are great, but what they really have mastered is the ability to make them, and that showed up last quarter.
Let's talk about the broader sector right now on two different angles here. Number one, EV stocks, they're up right now. We're saying Lucid's up, Rivian's up, but the Chinese EV makers, they're also up. At the same time, we're seeing Lyft and Uber down. I believe that's tied.
That's literally only because Tesla's stock price is up so much that it's going to pull the whole anything that's in relation to EV stocks all up, because it's like a ridiculous move here today. So don't get all hyped about the other EV players just because Tesla's bringing up the whole sector, because you got to understand Tesla trades in a lot of baskets with the other EV stocks and solar companies and things like that. So if Tesla the biggest weight, likely by a mile, in those sort of ETFs and whatnot. If that's up huge, it's going to bring everything up in a very substantial way.
Some of the robotaxi announcements they made during the call. Just kind of give us some color on both of those, how you see Tesla influencing both the EV market and also the ride-hailing market.
Sure. So over the last several quarters, people have been concerned that the EV market has slowed down, and that's fair because it has. But we actually put out a couple of interesting notes about what's happening in China. In China, ICE vehicles, traditional internal combustion engine vehicles, those sales have collapsed in 2024, and EVs are actually doing well. We think that's a sign of things to come for the Western world as EVs continually proliferate. So that's the first thing. The second thing on autonomy, look, we're massive believers in autonomy. We think the future of mobility is autonomous. We agree with Elon Musk. We disagree with some of his timelines. So he was out there yesterday reaffirming that the Cybercab will begin production in 2026 and traditional Tesla vehicles will be able to operate autonomously starting next year. That's put pressure on some of the ride-hailing stocks. But we're big believers in both electrification and autonomy, and those are the two areas where Tesla is focusing a lot in the near to medium term.
George, very quickly, we got to get out of here, but I got to correct myself. When I looked earlier, Li Auto, XPeng, they were up. Now we've seen they reversed. They're in the red. These Tesla results, is this putting pressure on their business now?
Look, what we've seen consistently from China over the last, call it 9 to 10 months, is that EV sales are picking up and ICE sales have collapsed. So the future is electric. The difference, though, between Tesla and many of its Chinese competitors is Tesla can make money. And ultimately, for long-term staying power, that's obviously very important. So Tesla has proven it can not only grow and make a really good product, but they can do it at a price and with a manufacturing that consistently makes profit. So that's the difference between Tesla and some of its Chinese competitors.
That reminds me a little bit of Apple. I remember seeing a study that was done. This is years ago now. It might be 5 years ago or something like that. But essentially, Apple made 110% of the profits of the EV industry. You might think, well, how the heck is that even possible, right? Well, because so many of the ones that sell, not EVs, smartphones, so many of them lose money. And so because Apple makes so much money, right, and others lose money, they were making like over 100% of the profits they had estimated, which is just like ridiculous to think about, right? So, it sounds like that's how the EV industry is. Like no one makes money really, except Tesla. Like Tesla's really the king. I have heard things like BYD might make money, and maybe one other Chinese company. But that might be from other things outside of just selling EVs. But the moral of the story is, the bottom line is, nobody in North America, none of the North American manufacturers, none of the European manufacturers make any money from EVs. They lose a fortune. Every EV they sell, they lose a fortune. It's like ridiculous sums of money, right? Some of them, they're losing like $10,000 plus per vehicle sold when it's an EV. It's insane. Here's Tesla's bull and bear case following the earnings stock pop.
To Tesla, the shares are surging, of course, after the company, after the bell yesterday, reported better than expected profit. Let's get the take from two analysts who are on different sides of this. Colin Langan, Wells Fargo analyst, joins us. He has an underweight rating. Did raise his price target to 125 from 120. Tom Narayan also joins us frequently. RBC Capital Markets analyst, has an outperform. He raised his target as well, and as you might imagine, it's far higher at 249. Guys, Colin, let me start with you. Is it getting a little harder to defend a negative view given that quarter?
I mean, the quarter alone was a good quarter. I'll give them credit for that. OpEx, energy gen was stronger. But look, it was a 12-cent beat versus consensus. 7 came from full self-driving release, which is really an accrual for prior deliveries, prior services they gave on software. So I really think that should be considered one-time in nature. And most of the rest was actually stronger EV credits. I'll give them credit. The COGS were very, very good. But for my concern has been the price cuts and volume. And year-to-date, volume's down 2%, and pricing was down 3% in the quarter, and it's down 5% versus Q4. So the core auto business, I think, still is in struggle, but they did a good job on costs. I'll give them credit.
And you're not a believer in Musk's predictions for next year in terms of the increase in sales?
I am not. I think if you look at the lower price model is probably going to cannibalize some of Model 3 and Y. Also realize we're seeing demand there, as I just kind of highlighted, demand is sinking.
I don't think so. If they go the two-seater route. If they go the two-seater route, which I think is what they're going to do, we'll see. If they go the two-seater route there, I don't think that's going to cannibalize 3 and Y at almost all. And the reason being is those vehicles are seen as vehicles that, it's for people that want the back seat, right? They might have 4 or 5 passengers. Maybe it's a family, things like that, right? Whereas the two-seater, it's like perfect for single folks, maybe just a couple, a lot of those sorts of folks, retirees, right? Where it's just, a grandma and the grandpa living together, like those sorts of folks. And they're looking to get around, right? Go to the Cheesecake Factory, right? All those sorts of things like that. Like, that's a use case. And so I don't really think it cannibalizes the 3 and the Y.
Those models, even with the price cuts. So I think demand is going to definitely not fall short of the 20 to 30%. I actually think there's a risk volumes could be down next year. So, yeah, I don't believe in it. I also think we have to focus on about margins, right? So a lower price model, it's going to be hard to make that profitably. And it's also going to be hard to slot that in because you're already getting something like $3,000 to $5,000 in financing promos on vehicles like the Model 3. Doesn't leave a lot of cushion to lower the price of the Model 2.5 or whatever people are calling on this lower price version.
Tom, I would assume you have a different view, and obviously an important point here is that margins did come in well above what many had been anticipating, including, I believe, yourself.
Yeah, I actually agree with a lot of what Colin said, believe it or not. The 17.1% gross margin ex credit was a strong beat. I do think if you take out those FSD deferred revenue piece, you still come out with a very strong gross profit margin ex credit. And that comes with all those price cutting. So exactly that is why we actually think that the automotive performance was actually pretty healthy. They were able to do it with substantial price cutting. Look at the other OEMs, the legacy OEMs, what's been happening to their margins with price cutting. And I actually think the setup for next year on growth, I agree with Colin. It's not going to be 20, 30% that maybe Elon is saying, but we have a 13% growth rate, which is actually where consensus is. There is growth rate, and if they can do it with the margin strength that they have, now folks can stop thinking about the automotive piece and margins and start looking at what really should drive the stock, right? Which is non-automotive things, energy storage, autonomy, potentially Optimus. But now I think it's more of the distraction that was this automotive piece. Now folks can turn their attention.
Now this is where the stock price gets very interesting, right? This is supposed to be the man that's bullish on the stock, right? His price target, remember these are 12-month out price targets, 249, right? They just showed it. The stock's 258. The stock right now is trading above his 12-month price target. So what does he have to do if he's bullish on the stock? He's going to have to come out. He's going to have to upgrade the stock. He's going to have to bring up his price target and maybe move that to 298, 278, like 300, something like that, right? 310. And so the more Tesla stock goes up here, the more these folks, the bullish and the bearish ones, are going to start bringing up price targets, and you're going to start getting those headlines. Price target upgrade, price target upgrade, price target upgrade, right? Boom, 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 one after another after another. And so on the downside, it's no fun when you're getting obliterated with, everybody bringing down their price target one after another, after another, after another. But on the upside, it is a lot of fun because they just keep upping those price targets more and more and more. And it pushes the stock to much higher values than honestly it would probably be trading at. And so that's an important thing to understand. Like, what's this man do? He's going to have to, if he's bullish on the stock, he's going to have to bring up his 12-month out price target. He's going to have to put it at something in the high 2s or in the low 3s. That's what he's going to have to do, right?
Things that actually drive the stock price and the market capitalization to where it is.
Well, Colin, is there election risk around Tesla stock? Is that part of the thesis at all?
Well, I think, just on the last points, I mean, I think the stocks are forward-looking, and so can the level of cost performance...
Wait a minute, hold on. He's missing the point here. Election risk. Is there election risk in the stock? No, there's not. Here's why. Dems win. Do you think they're just going to take away all the obviously, in terms of that party, they view renewable energy, climate change, all that stuff as very, very high-level stuff, very serious stuff, right? And so they want to do whatever it takes to incentivize companies to produce solar, to produce renewable energy, EVs, all that stuff, right? So that party, even, if things don't work out there, it is what it is, right? On the other side, Elon Musk has cozied up to the big dog of the party, the one that runs that party. Let's be very crystal clear. There's one man that runs the Republican Party, and his name is Donald Trump. And it's not even close. And so, given that Musk has built a very close relationship there, I don't really think Trump's going to want to take away a lot of these incentives that are helping Elon Musk and are helping Tesla. I don't think so. That's my belief on that. I don't think he's going to take that stuff away. So regardless who wins this election, and whether it's a blue wave, red wave, I honestly think Tesla sets up well for either one because of the decision Elon Musk has made there, right, to cozy up to Trump. Now, if he had not made this move, it's a little game of chess here. There's a potential that a lot of the stuff could be taken away, right? But now that he's done that, I have a hard time seeing all these EV credits and all these sorts of things be taken away. That's the bottom line in regards to that.
Continue. They cut price about $1,500. Can they really take another $1,500 sequentially? I don't think so. So I think as we go into Q4, not only do you have the FSD coming down, but you're probably going to still have some of that pricing pressure continue.
And I also don't think Trump is anti, renewable energy and those sorts of things. Obviously, because he's on that party side, he's got to always be pro oil and want to have jobs in that industry and not decimate that industry and things like that. But at the same time, he never has come across to me like he's anti-renewable energy, anti-solar, anti-EVs and things like that. It's just more of he's got to play the party, and that party has to always be cozied up to obviously the oil and gas industry.
So I think forward-looking, I think we're going to still see the auto business under pressure. I also would take a different view on the robotaxi view. We just had that robotaxi event. There's still challenges. They really aren't addressing some of the issues there. Can they actually do this with vision only? Will the economics work? Will they get regulatory approval? Realize that robotaxi event was done in a Hollywood studio because the vehicles aren't yet approved to actually be tested on public roads yet. So there's a lot of challenges ahead. So I would actually take the counter on the robotaxi side. I actually think, you look at companies like Waymo, they're actually doing a lot better.
Yeah, a lot of challenges ahead, but that's nothing new for Tesla, right? I mean, this is a company that, let me be very clear, when I first started investing in this company back in, 2018, 2019-ish, right? There's a lot of these bearish folks were saying the company's going bankrupt. They're not going to make it. Their margins are too bad. The balance sheet's too bad. This is too bad. That's too bad. Everything's too bad. And they're going to go bankrupt. And they made it through that. They made it through the Model 3 hell, as Elon Musk used to call it, right? They made it through the Model Y ramp. They made it through Rona, high inflation. They made it through all these sorts of things and faced countless challenges. And so, if anything, I look at a lot of these upcoming challenges is a lot easier to get through than a lot of the stuff they've been through. This stuff is more cake than a lot of the stuff they went through. I could tell you over the years, because some of that stuff was brutal. Now they're just working on stuff like getting regulatory approved on certain ways. They're just working on finishing the last parts of FSD to make sure that's near perfect. This stuff is actually easy stuff compared to what they've been through over time. Oh my gosh. The story with Tesla earnings is gross margins.
Tech. I know you're going to want to talk about Palantir eventually, but let's talk about Tesla because those numbers are out now. Revenues are light, but hey, earnings. What matters more here?
I mean, the whole story is about gross margins. I mean, that's really been the headwind on Tesla stock. I'd say $30 to $40 of a headwind to the stock. You saw gross margins. I mean, this is a blowout. Not even us thought that we could see a gross margin where essentially is anywhere from a 200 to 300 bit beat. This shows price cuts now under control. margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock ultimately. This will have a 3 in front of it as a stock as the gross margins start to trend up and as well as growth into next year from a delivery perspective.
So does the robo-taxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous, is robotics, is essentially the...
Oof, I'm up $58,000 on my Tesla shares in the public account today. I will take that. Thank you very much.
AI play. Street, what they needed to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for, because that was ultimately the core of the story.
Yeah, to your point, free cash flow, $2.74 billion. That trounced expectations for Q3. But some of the details we're getting here on the outlook, I think, are also really notable. They're basically saying, despite the ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Also talking about energy storage deployments that are going to more than double this year. But perhaps this is most notable because I know you've written about this, saying plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. What should we take away from that when I know a lot of folks have been looking for a sub $30,000 vehicle? We're even expecting to get some details on that at the robotaxi event, which maybe was unrealistic.
The linchpin to the story from a growth is a sub 30K vehicle. And I believe that that hits by middle of 2025. That's the growth. I mean, that's ultimately, you're talking about like single digit growth this year. That's how you get to 10, 12, 15% type growth. Margins under control. That's what the bulls want to see. And I think the fact that they actually doubled down on, and I expect clearly on the conference call, they'll focus not just on margins, but more details around that vehicle. Look, robotaxi day, we could argue, many would say that they're disappointed. I believe ultimately that shows the vision, the autonomous and the AI vision. Street need to ultimately see, stop talking the talk, walk the walk, show the margins. They did it. And Musk really has, I think, stepped up in that capacity.
In what's been a year of softness for EV demand and obviously more adoption of hybrid vehicles, for example, are we going to look at Q3 as an inflection point for that changing, especially when you look at results like this today? Or is this a Tesla-specific story as they do deploy more manufacturing techniques, more software, more AI, both internally and externally?
I think it's a combination. I mean, you had you look at GM's quarter. I mean, that was a Juan Soto-like quarter for GM. And then you look at what we've seen in terms of Tesla. I believe this is the inflection point. This right now is the start to me of what we're actually starting to see from a gross margin perspective. The renaissance of growth come back. They've essentially been in between two growth waves. Next year, you have a sub 30K vehicle. Then the autonomous and AI vision plays out. And that's, in our opinion, that's how you get to trillion and a half market cap. And right now, as we've seen, look, New York City cab drivers bearish on Tesla.
Okay.
And I think that's a good setup relative to what we see in the next 3-4 quarters.
Listen, we got to go, but quickly, Palantir, your reaction to that news?
I mean, that's huge. It just shows doubling down on Carp and Palantir on the defense side. When you think AI in the 202 area code, Palantir really owns that market. The fact that that partnership, just like Microsoft and others, we'll hear more in your interview tomorrow, that's a huge flex the muscles for Palantir and Carp.
Oh yeah, I'm sure I'll be covering Palantir very shortly for you guys here on the channel. So what do I think what happens with Tesla stock from here before we get into Gene Munster? My thought is short-term stock runs to 300. When I say short-term, I'm talking over the next few weeks, over the next few months. Stock runs to 300. That's kind of my thought in regards to it. Then it flounders for a while, right? It goes up, goes down, doesn't really do anything for a while. And then we see, what happens with the new vehicle in terms of production, demand, those sorts of things, right? And then we figure out where do we make our next move. Is it a move from 300-ish range back down to 250? Or are we going from 300 to 400? If that new vehicle seems like a banger, demand seems insane there in 25, I think we're making our next run to 400 plus, and we'll take out new all-time highs at that point in time, right? Because then it's going to be like, oh my gosh, Tesla's back to the big, huge growth days. Margins are exploding for the company. We're close to robotaxi. Maybe they get it launched in a market, right? And then all of a sudden, like the whole story is just crazy at that point in time. So we'll see. But my thought is short term it runs to 300. Okay, so we'll see what happens with that. All right, Gene Munster.
Where did it come from? And to Tim's point in terms of lumpiness, this looks like a great quarter, but we don't know. We have no idea what next quarter is going to be, and that's sort of the roller coaster ride that I guess investors have to just expect.
Yeah, I want to put a little bit of context on next quarter is that they did give some guidance related to what the revenue is going to look like. They said that they expect deliveries for 2024 to be up slightly. That basically implies 10% growth for the December quarter for deliveries. The street was at 0.5, so call it 1% growth. So their outlook for December was a surprise. I was expecting the profitability to actually be below the street. I was not expecting them to move up. So as somebody who's optimistic about this caught me by surprise, kind of the strength in these numbers. I do want to highlight an important point on the profitability. The 17.1%, that auto X credit number, that critical number that we've all been talking about, that did have a benefit, a one-time benefit of some of the Cybertruck FSD recognition. We'll hear on the call how much that impacted. So I suspect that there's going to be some dial back on that. Either way, it still likely will have beaten where the street was expecting for the margin number.
What's your number one question going into this call?
Number one question is what this new vehicle looks like, and ultimately, is it just a adjustment to Model 3? That's what I'm going to be focused in. Are they going to give any color? The reason they didn't talk about that at the We Roll About event, they don't want to show an image of a new vehicle coming and slow existing sales. So it makes sense that they held it to this forum and hope to get some context in terms of what that vehicle actually looks like.
Should we assume that this is basically, it uses the same sort of chassis or parts as a Model 3, so as not to have to, create a whole new line in a factory or mold entirely whole parts?
That's generally where consensus is at now, is that they're going to have to use the existing. They don't want to, as you said, kind of spin up Giga Mexico. That's probably not going to happen. That would be the case if they were making progress on Giga Mexico, which they're not, for kind of a smaller two-seater. So I think it's optimistic to think we're going to see that. Initially, I thought maybe because they're building some of them for the Cybercab, but I think that investors should probably put their head around a stripped-down Model 3 here to get to this. I like what Dan said. They're not going to hit the $25,000. It's probably going to be 30. But keep in mind, this is the part that blows me away and that I think investors should be contemplating here. They've cut their costs by 6% year over year on doing EVs. They're making money on EVs. Other car companies are retreating. They're doing that with some of these lower cost vehicles. ASPs are down 6%. What this all means is they're doing all the right things to prepare for the future, to build electric cars. And I think this is still a major problem for traditional auto. How are they going to solve this when they're not investing in production of EVs?
Hey, Gene, it's Karen. Thanks for being on today. What are you expecting to hear about China?
It's kind of fallen below the fold here. And so it ultimately, I think what's most important is that they see growth in China. And so when are they going to see growth? That has been a headwind. So call it China's about 17% of overall units right now. And so it's important. I like to hear about growth, but it kind of falls below the fold.
Hey, there's a stock I want to check on here. That I'm very interested to see, and I might add it to my policy. By the way, Whirlpool. I did a video on the main channel. This was probably, how many days ago did I do that video? It might have been 2, 3, 4 days ago, in the past few days, okay? Did a video on the top, what was it called? Top 7 dividend stocks to buy. One of the stocks featured on there was Whirlpool. It's already up 13%. Oh my gosh. Holy smokers. LVS, Las Vegas Sands. I've never wanted to buy LVS, but I'm actually somewhat interested in this one, believe it or not. Especially if it's down big today. Freak, it's up. It was down after hours too, damn it. I was hoping that one went down. I would love to see that one go down to the low 40s or something like that. But yeah, I've always been partial to Win stock, right? But LVS actually, valuation-wise, is somewhat intriguing. Damn it. See, and LVS has popped huge, just like Win has popped huge recently because of the optimism on China, right? Damn it. I'm not happy about this. LVS really is interesting to me here. So we go to LVS. And of course, this is another company that has massive depreciation and amortization. So the reality is they kind of more profitable than it really seems. But forward P of 18 on this one. They have such a massive market share in Macau specifically, but then they also have their crown jewel property, in my opinion, which is Marina Bay Sands, which is in Singapore. Oh, what a property that is. That's a 101. And so, yeah, I like LVS. I don't like it as much as Win, though. I do like Win more. Win makes me sleep better at night than holding an LVS because LVS is so tied to China and so tied to Asia, whereas Win is a little more diversified, because they're more US and Asia. And then soon Middle East, when that Middle East property opens, right, in a couple years. But, dang, LVS, damn it. I was really hoping that one, because after hours yesterday, I saw it go down to like 47 or so, or 48, something like that, and I was hoping it.
So you talked about that margin improvement benefiting from cost of goods sold coming down. Like, how do they get there? If you think about raw materials and shipping and all this sort of stuff, have they come down that much that would help, the margin? So just help me with that, because again, in a year where you're going to have deliveries, in line to probably a little bit less, how do you get that leverage? I'm just curious.
So one way you get it is by improving production and the efficiencies around the Cybertruck. That's been a huge drag. So by just streamlining that, you get some of that benefit. So keep in mind, the ASPs are down 6% year over year, and the cost per vehicle is down 6%. So not only did they lower prices, average price now of a Tesla is $42,000. Average price of a new car in the U.S. is $47,000. So to answer your question, Dan, how did they get there? And the answer is that I think a lot of it was related to what's happened with Cybertruck.
Alrighty, folks, that wraps up today's video. Yeah, I mean, Tesla, it's crazy, man. Things have really turned really fast in regards to that one for the better. And so that definitely, the company is getting into much more of a position of power now than certainly where they were in even a few months ago. The story's really changed in regards to Tesla, much more bullish. And so as a shareholder, I'm very pleased about the progress the company's making and what's going to transpire for the company in 25, 26. I think that's the most exciting part. So, yeah, that stock actually remains a buy here right now. So that's that. Okay. Appreciate y'all joining me as always. Thanks for smashing that thumbs up button. Thank you for being subscribed to the channel. Additionally, if you're looking to apply to join my private stock group, get access to all my best course curriculums. That's going to be the pinned comment down there. You also get access to our private group's Discord chat with the 6, 7, and 8-figure members and myself, access to our Tesla community, which is a 101 community, and our Palantir community, which is also a 101 community. Absolutely phenomenal. Okay. That will be pinned comment down there if you're looking to take your game up to a much higher level than where you're at. Much love and have a great day.